Right, legends, it is Monday, getting ready for the week. Are we going to get some volatility to trade this price action to the up and to the downside? Let me just put the music so softly here gently here in the background. Hope you all had a fantastic weekend. Before we jump into this, guys, because there's something to discuss over here, I want to focus on the daily time frame, and I want to look at this structure. Okay, as per the thumbnail, what can we expect for 2026? More specifically, the first quarter of 2026. Are we just going to crash here to the downside, go and revisit the lows? What are the probabilities? Are we going to make a higher low, continue to the upside? Are we only starting the bear market here from this point and we're going to fall down? Can we still create a higher low and continue up? We need to discuss the probability. So I've done a little bit of macro analysis. And I'm going to share with you the scenarios, and then I will share with you my summary in terms of what I believe has the highest probability of playing out. Okay, because it's quite interesting. I think we're reaching that time of the year where, what does next year have in store for us? Can we more or less gain probabilities? Because nothing is ever guaranteed. But is there a chance for a nice little relief rally or a bull run or a continuation for next year? Or is 2026 going to be absolutely disastrous? Okay, during 2025, we've had our ups and downs, but yeah, from 2025, okay, round about here, okay, we've had our downs, which we started with, and we had our up, and now we had a down. So this is basically what we had for 2026. Down, up, down. That's what we had, okay? Not much, right? But I mean, there were so many trading opportunities inside of this range. I have seen a lot of posts on social media of people saying that it has been the toughest bull market to trade, especially when it comes to altcoins. Bitcoin has given us nice little momentum here to the upside since 2022 to where price is at the moment. Even here, we've had a nice little bull rally inside of Bitcoin. But not as aggressive as the previous bull markets, okay? Not as euphoric as the previous bull markets. It is very strange to end something without euphoria. It's not typical market behavior. To end something with minimal euphoria and then start a correction or a momentum to the downside is very rare. So let's get the party on the road. If you haven't smashed that like button just as yet, remember, all it takes is a little click there down below. Let me go and do that as well. And before I dive in there, guys, Valto at the moment still, I have made a tutorial on Valto. I see it didn't get a lot of love. Maybe people don't enjoy trading on Valto, but they have the lowest fees at the moment. Okay, even lower than Mexi. If you guys want to check out my story, I think it's got like almost 10,000 views. This video has been performing absolutely well. But anyways, if you haven't checked it yet, go and check out my story. Basically how I started, the struggles, the pain, and the success eventually. Okay, go and check that out if you haven't checked that out yet. But for now, okay, what I need to do is at least go and smash up my own like button over here. There we go. My own little like button. I need to go and smash that up. Okay, guys, now let's get Hi Dewald serious. But maybe before I get serious, let me just briefly go through the comments. Hit the like, Blix and Peace. Hi Dewald, hi everyone. Mr. DeFi, welcome. Crypto Big Brains, great to see you here in the live stream. Much appreciated. Always appreciate the love that the Legends is giving here in the live stream. Legend himself, welcome. Right, Dewald and the Legends, Mr. Jack is here as well. Always appreciate the mods. Let's go, Mr. Nico, I see you here. Joan, welcome to the live stream. Okay, but great job you are doing. Perfect. Not personal, but I do think people are bit sick of exchanges being shilled. It is, guys, and unfortunately or fortunately, I'm not sure how you're seeing this, is by me shilling the exchanges down in the description, is because it takes, if I put my business hat on, it takes time to do these live streams. I have to do research. I have to buy the equipment to go live. I have to maintain the camera. I have to pay for the Wi-Fi. There's business expenses for me to come and deliver these services to you. There's time and effort. So by you using the links down in the description to trade doesn't cost you anything. In fact, you benefit from the best deals that these exchanges has to offer, because by Googling this, you're not going to get these massive sign-up bonuses and low trading fees. And I get a small little commission from every time you place a trade, a percentage of the fee that you pay. So if you pay $1 to open up a trade, I must probably get 10 cents of that. So it's part of the business, okay? And it's for me to also get something in return for doing these live streams. It's not big, guys. It's not big, but at least, if it can cover some of the bills, then I'm happy, because I also can't trade when I do these live streams. Anyways, my passion is to provide education and knowledge. Let's do a little bit of higher time frame analysis. So I've done a couple of scenarios, and let's start. The reason I'm using Valto, okay, the reason I'm using Valto is because when I trade with my funds inside of a wallet, I want to be 1,000,000% sure that it's safe. My preference is, ideally, I want to know the team. I know the CEO and I know the team. This is why I've chosen Valto. Okay, because if you have a wallet, and for those of you, it's most probably happened to a couple of you as well, because it's happened to me in the past. If you connect your wallet to a protocol that gets hacked or that's not really trusted, you can lose all of your funds. Okay, so you need to be very careful where you connect your wallet when you want to do trading. I'm not saying Hyperliquid is bad. I'm just saying my choice is Valto, because I know the team and I trust the team. And before I connect my wallet to anything, I want to do proper research. I want to know the people. I want to, the values, what they stand for. Are they going to run away with your money? Do they have a user protection fund? These are all the things that I investigate before I just connect my wallet to anything, because I know about many people, including myself in the past. When you go and listen to my story, I have been hacked. I have been scammed in the past. And some of it is because you connect your wallet to some dodgy place, or it's a trusted platform, but they don't have the proper security protocols in place. And then they get hacked and your data gets leaked. Right, so let's start, guys. First scenario. Okay, let's look at this scenario. Unfinished fifth wave here to the upside. I kept the scenarios very simple, and then at the end of these macro scenarios, I will give you my summary. But in this scenario, price has basically formed a 1-2-1-2-1-2. Okay, I know some people are going to say this. On some exchanges, this low took this low. So you can't count that as a 1-2. But I'm entertaining the scenario because on the major spot exchanges, like Coinbase, for example, it did form a higher low, right? It's exactly what happened here with this dump here to the downside. Do you guys remember? Some exchanges had a long week to the downside, which made a higher low. You guys remember the deal. So you need to, just give it the benefit of the doubt. So let's entertain the scenario. In the scenario, when you have multiple 1-2s, and you have your third wave to the upside, you want to see 1-2-1-2-1-2 3-4-5-4-5-4-5. So we're still missing one more leg if it's a triple 1-2. Okay. Ideally, what you want to see is that these fours are very close to each other. Okay, and it's very normal, even for this fourth wave, to claim this low. It's very normal, but you don't want to see it capitulate. It needs to hold this zone over here to expect one more leg here to the upside to complete this triple 1-2 structure. Okay, so in this scenario, what you basically expect is for this correction to come to an end soon and do another impulsive structure to the upside to complete this fifth wave. After only then the bear market will start. So this can then be seen as a normal correction that we have seen on the way up. Normal little correction. Okay. Right, next scenario is basically very similar, but I'm counting this structure as a 1, 2. Okay, this is a 1, 2, 3, 4, 5, A, B, C. So now this scenario for me makes a little bit more sense than the previous double 1 or triple 1, 2 scenario, because on some exchanges you took the low. So now I'm considering, well, what if this is just a 1 and a 2? Okay, and then all of this is a third wave, where we have completed a 1, 2, 3, 4, 5 inside of the third wave. We are now busy with this fourth wave over here. To repeat this second wave, you create the 4 and you have one more leg to the upside. Okay, in this scenario, which actually carries higher probability than the triple 1, 2, this correction is too short in time. This is why I made this note over here. Timing is an issue at the moment. Okay, so usually from a theoretical perspective, you want the fourth wave to at least be the same length as that. Okay, and if I just take the box and I put it over here, you guys can see that there's a little bit of a problem. And this is why I wrote timing is a problem. In this scenario, you expect this correction to still last a little bit longer before we get the leg to the upside. It will be very rare for the correction to end here and just push here to the upside. Okay, so if I take a time fib, now I can be very technical and I measure how long did it take the second wave. And I then say, okay, well, since the high was made over here, you can see that there's a problem. Okay, the absolute minimum requirement is that you want this low to have been made after the 0.382. So in this scenario, you still expect the low to be made after the 0.382. Then we can label that a fourth wave and we can still go and complete a nice little impulse to the upside that could potentially even take us to $200,000. Okay. Right, so also just to wrap up this scenario, inside of your third wave, you then basically, okay, I just need to make sure, guys, okay, I want to take a magnet and I want to snap it onto this pivot. Okay, and you can see, because this is what a lot of people will point out to me, is that 1 and 4 is not allowed to overlap. And as you can see, it did not. There's no overlap. Almost, but it didn't overlap. Okay, so you can count it as an impulse. Right, one thing that I do need to highlight with this structure is there's one slight problem with the structure. Remember, every structure will have a problem. You, as a technical analyst, need to identify which structure has the least amount of issues, therefore the highest probability of playing out. It is very rare to end an impulse on a three-wave structure. Okay, unless this was your 1, 2, 3, 4, 5, and all of this just moves over here, and then you basically fix the problem. So you're not taking, okay, the highest point as the end of the structure. You're placing the highest point where it actually makes sense. Now this makes sense. 1, 2, 3, 4, 5 in a contracting ending diagonal. This was the end, ladies and gentlemen. So now, what now makes this interesting, now I take the time fib again to say that, well, if the high was made over here, and this is all part of a corrective structure, does this low make sense from a timing perspective? You take number 1 to 2, okay, up until this point, and now it looks a little bit more interesting because now you can see, okay, the low was made even after the 0.618, where this is the minimum requirement. So at least you know that if this is the fourth wave and this is potentially the low, or it's going to make one more low, it's in the zone where this fourth wave can end, and we can still get a push to the upside to go and complete that little fifth wave. Okay, here we go, the fifth wave. Right, let me just put it a little bit closer. Technically, if I work out this scenario as such, this scenario, when I place number 3 and 5 over here, has no mistakes. It's an absolute beautiful impulse to the upside. Okay, so I will prioritize this scenario over the multiple 1-2s that I've just shared with you. I don't like the 1-2s, guys. I really don't like it. But you can see that the end result, okay, this is where I'm going to get to the summary. Okay, I'll get to the summary in a moment. So just keep the scenario in mind. Let me put that line in here so I have it saved. Then, scenario number 3, okay, is basically we are now in a bear market. We have just started the bear market after we made the high over here. Okay, all of this is just the beginning of the bear market. So whether we turn around here and still go down, or whether we fall a little bit and make a B wave and then a C wave, but you basically want to see a larger bear market to the downside that will most likely find support inside of this zone. So it could definitely come down to around about the $30,000, $25,000 zone that I see a lot of people on social media is talking about. Okay, if this is the scenario, that 3-wave structure, guys, is still a problem. And this is why I have a diagonal. Because you are allowed to end a 5th wave in a 3-wave structure, but only inside of a diagonal. Okay, so in this scenario, when I zoom in to this little structure, okay, you can then see, well, after we made the 3rd wave, to go and complete the 5th wave, we had a 1. Okay, guys, it should actually be like this. It should actually be like this. Okay, let me just do this. Okay. Right, there we go. That's actually, guys, I did it wrong. That's what it's supposed to look like. You had a 1, 2, 3, and the minimum requirement inside of a contracting diagonal is that the 5th wave takes the high of 3, which it did. Literally barely just scratched it, but it did take the high. So I can count a 1, 2, 3, 4, 5. Okay, and this, ladies and gentlemen, is just the start of a long bear market that will even run until the end of 2026. You can see here, November 2026, just by plotting it out, very basic. Okay, it has to be said, and let me just highlight a couple of probabilities at the moment. An ending diagonal inside of a macro time frame, okay, is rare. It's not common as some of the structures that I've just shared with you. Okay, also, nothing is invalidated, but I'm just looking at probabilities. It is also strange, the minimum requirement for the 5th wave is to at least take the high of 3. But most common, the most common minimum requirement is to at least tap the 0.618 of the length of 3. Guys, I know this gets technical, but this is how I work out probabilities. So if I work out the length of wave 3, I've now measured the length of wave 3, and I place it here at the bottom of 4, you can see that most common in an ending diagonal, your 5th wave should have at least tapped the 0.618. It literally just took the high and fell down. So it's not common to see this. So the first thing is you have an ending diagonal on the macro time frame, which is not common. And then you have a 5th wave that also did not tap a minimum requirement, a common minimum requirement. Okay, but it has not been invalidated. And this is why I've highlighted the scenario. But in the scenario, okay, it's doom and gloom, guys. In this scenario, we have basically we are still busy, either complete it or it's still going to fall here to the downside to form a wave A, you form a 3-wave B, and you form another 5-wave to the downside to complete your C wave. Now, this little zone and this little zone become very interesting buying opportunities to then play the next leg to the upside, because this becomes 1, this becomes 2, and you go up for an explosive 3rd wave to the upside. Okay. Do I have any other scenarios? Okay, and this is a scenario that I have been talking about quite often, is a simple 1, 2, 3, 4, 5. The bull market ended in January this year. That's where the bull market ended. So we have already been in a bear market without realizing it, because we have a flat corrective structure that took the high. So in this scenario, you have formed an A, a B, and a C. But this structure needs one more low. It cannot end over here. It needs one more low, because I cannot count a completed 5-wave structure here to the downside. So in a A, B, C flat, we need one more low. And then we continue. Okay, this is 1, this is 2, and it absolutely explodes here to the upside. Okay, this scenario actually carries higher probability than the previous scenario that I've just shared with you, because of how this ended. You can end a B wave in a 3-wave structure. Very normal, and is actually what you want to see. So after an impulse to the upside, a 3-wave corrective structure in a complex corrective structure in a WXY for the B, now you want to see a 1, 2, 3, highest amount of volume has to be in the 3rd wave, which we got. So you want to see another low to the downside on lower volume. And once that happens, lower volume, one more low, that's a great opportunity to go long and claim the high again. That's the swing trade that I'm waiting for, guys. That is the swing trade that I'm waiting for. I want to see one more low on a decreasing amount of volume, because I can see a 1, 2, 3. It does not have, it has 4, but it needs one more leg to the downside. So if things just starts recovering up here, it could still be part of a larger corrective structure. Okay. Or maybe it's just going to explode, but then, you know, this scenario is invalidated. Right, so in this scenario, we need one more low, just to keep it simple. But I have discussed this scenario multiple times, so everyone should be very familiar with this scenario. Okay, but I did make a note here. As you can see, this scenario needs one more low. It cannot end over here. Okay. Unless this is a WXY, which is rare. WX, and you have an ABC in a Y. Okay, and you basically have a running flat, which means that your corrective structure to the upside took the high, but to the downside, it did not take the low. That is what we refer to as a running flat, and it's also a rare corrective structure. And when you start looking at corrective structures that are rare on the macro time frame, they even carry lower probability, because on higher time frame, technical analysis becomes more accurate, more common, simple structures. You guys get what I'm trying to say. Okay, so I think if price stops here and it starts going up, it's going to continue, and we're going to have to start looking at those other scenarios that I've just highlighted. Okay, it's not part of the same structure anymore. Right, so let me explain the difference, guys. Let me quickly explain the difference. This scenario, okay, if it makes one more low, if it falls and makes one more low, has the potential to even go past $200,000. Because this becomes 1, this becomes 2, and you're now expecting a third explosive wave that can even be longer, much longer than this. Because in a 1, 2, 3, 4, 5, your third wave is the most explosive, carries the highest amount of volume, and creates absolute euphoria. So it would be very strange to get a 1, a 2, and a 3, just like that. And it can't be. So in this scenario, okay, the difference for me in this scenario is that if we make one more low, it has the potential to really rock and roll to the upside. If price does not make one more low and it continues to the upside, then I have to consider and give the following scenario higher probability, which is this one. Okay, can you guys see the difference? In this scenario, there's a chance that your fourth wave could be done. Let's say it's over there. If price moves up, takes the high from where it is at the moment without making another low, well, I'm not going to be super bullish. I'm going to be looking for a correction to start anywhere between $150,000 to $200,000. In this zone is where you could top out in a 1, 2, 3, 4, 5, and then you start a correction to the downside. If price makes one more low, then you open up the door to more bullish momentum. Can you guys see the difference? Okay. Right. I've discussed that. Okay, just something interesting that I wanted to point out as well, legends, is that even if this is, okay, let's just say something else that I looked at is this could also still be 5 in the previous scenario. Okay, this is still part of A, this is B, but we form a larger 1, 2, 3, 4, 5 in a C wave. Okay, and that basically becomes an ending diagonal, so this little needs to go, okay, because this could then create also another explosion here back to the upside. Anyways, I don't want to spend too much time on that. I was just analyzing what could morph from this structure. Okay, because you can still form. The interesting thing about this structure, where did I have it now? The interesting thing about this structure is that your C wave, okay, let me just do this. A, this is B. Okay, there we go. And this becomes C. Oops. There we go. In an ending diagonal, okay, you can have 3 wave structures. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Fifth wave continuation. Okay, or it's an ABC and we continue the bear market. Right, it's just something that I was thinking about while I was doing the analysis. Right, and those are basically the scenarios, guys. Now, what is interesting, okay, based on all the scenarios, what can we expect for 2026? Okay, so I have a little bit of a summary over here. And this is basically where I plotted out all of the scenarios. Okay, the one scenario that I don't have here, I just want to see. The one scenario that I don't have here is that the bear market continues much more. So it is basically the A, the B, and the C here to the downside. The bigger ABC. Let's just drag it there and let's make this one red. This is the doomsday scenario. That's the one I forgot. I just saw it now. Okay. So from a probability perspective, based on everything that I've analyzed this morning, taking the 3 wave structure into account, looking at the waves, looking at everything, you can see that most of the scenarios, all of them except one, finds support in this zone. And it continues to take the high. You have one scenario that continues to the downside. So I don't know about you, but when I work out probabilities, if I have 1, 2, 3, 4 scenarios pointing up and I have one scenario pointing down, well then the probabilities are higher that we are going to find support in the zone and take the high again during 2026. Because I cannot put all my chips in the basket for one scenario that points down. Okay, and inside of that scenario, I showed you 2 issues. So, but because, you know, people will ask me, Dewald, there's so many scenarios, which one's going to play out? I don't know which one's going to play out, but when I do all of my scenarios, I work out probabilities, and I then trade the probabilities based on all the scenarios. So all the scenarios are telling me that Bitcoin, even with or without a dump, because there's the one that just goes up, okay, there's the one that the bear market one, there's the one that we make one more low. Okay, A, B, C, we basically make a three-wave structure, but we continue back up. There's one where we still fall, but you guys can see in all the scenarios, the highest probable outcome is that you find your feet inside of this consolidation area, and we take the highs again to most probably between $150,000 and $200,000. Yes, there's only one scenario that points down, and there's two issues with that scenario. So the reason it's still here is because it's not been validated. But when I work out probabilities, it looks like the probabilities are still geared to taking out this high, okay, before we absolutely tank to the downside. And guys, this is just based on technical analysis, okay? You do you at the end of the day. Remember, I'm just a crazy dude here on YouTube, sharing with you what I think is going to happen. It's not financial advice at the end of the day. Right, let me put this one in there. And that is basically what I see on the higher time frame. Let me go through some comments, and then we can zoom into the local time frame of what is happening over here. I saw the same scenario. Bull market ended in January 2002, but the target is 45k, not 70k. I don't know, lol. Well, it depends, okay? Because I just want to see which scale I'm using here. I'm here on the logarithmic scale, but let's go to the linear scale, okay? So if you're speculating on, well, the bull market ended here, this is an A, B, and a C to the downside, I can work out the targets from a trend-based fib perspective, okay? You take it from the high to the low to the high. Most commonly, and this is why I think a 45k target is a bit unrealistic for that scenario. If the bull market, okay, this is now the picture that I'm painting out here, because it's a very good question. If the bull market ended over here in a 1, 2, 3, 4, 5, and all of this is still part of the corrective structure, okay, in A, B, C, your maximum target is the 1.618, and some technical analysts will also even consider the 2 extension. So maximum, this is where price, okay, can extend to. It doesn't have to, but that's the maximum target. To go down here to the 2.618 at 40, it's very unlikely, or it is rare. Let me just use those words. It's rare to see an extension go down to these levels in a corrective structure. Okay, but you can see the 1.236 has already been tapped. Very common. Okay, I wouldn't be surprised if the 1.382 gets tapped over here with that one more low and it gets the bounce. This is very, very common three-wave structure targets, ABC targets. Okay, little bit extended, a little, this is already overextended here by the 2 extension. This is also where I was, is it really a C, or is it maybe a third wave? Okay, because when you start tapping targets like this in an A, B, C, you have to consider that this is maybe the start of something new, and you're going to continue momentum to the downside. Okay, so I'm not sure where people get that target from, okay, unless they're using logarithmic. Let's check what's the logarithmic scale targets. I just need to make sure that I do put this on log scale. There we go. Yeah. No, I mean the maximum target here is also the same, right? It's also the same. You don't want to tap the 2.618 because then it's a very extended C wave. You're going to have to see a black swan event. Something really bad has to happen for price to accelerate like this to the downside. If this is part of a corrective structure, you can see that this leg and this leg is out of balance. Okay, you want to see symmetry. And that's why the 1-to-1 extension is always so beautiful. And you can see here on the logarithmic scale, look at this. This leg and this leg is a 1-to-1 extension at the moment. Okay, but it's very common for this leg to be a little bit longer. And that is usually my maximum target when I consider the logarithmic scale, the 1.362. So that's supposed to be the 1.382. Sorry guys, I made a mistake on this little level. That's supposed to be 8. Okay, so if you did copy the levels, that's supposed to be the 1.382, not 62. I made a mistake there. But you want to see a relationship. You want to see a relationship. When it does this, it's out of whack. It's not in balance, especially on macro time frames, guys. It's fine to see this on the 1 minute time frame, the 10-minute time frame. It's fine to see these anomalies. But on larger daily time frames, weekly time frames, you don't want to see anomalies like this. Okay? I haven't seen anomalies like this. But to your question, if this was the bull market and this is an ABC, you want your maximum target to be the 1.618. But it can roll over here as well. It's within the zone to roll over, or to roll back up. Sorry, to roll back up. Okay, so if someone is talking about an ABC that takes you all the way to $40,000, they're not following Elliott wave rules. I hate to say it, they're not. Okay, where are they getting those targets from? Yes, if you work it out from a support and resistance perspective, I could understand, but then the Fibonacci ratios that they teach you inside of Elliott wave theory doesn't make sense. Okay, I do like how these two targets also align with this consolidation area, which is also considered maximum 3-wave structure targets. Maximum support. That's where you expect to bounce back to the upside. Okay, so I just have to address that question. Dewald, what do you think about the giveaway? Guys, I need to get back to you about the giveaway. I need to get back, but thanks, Hawkwatts XP. I will definitely get back to you about the giveaway. Okay, I've just been so busy with other things, I almost forgot about it, but I do have it here in my notebook. Okay, I'm not going to forget about it. Okay, Dewald, the most smart and successful crazy dude. Thanks, Mr. Casey. Yes, thank you very much. This is why I follow you and Andy and rely on your analysis. Put on mascara. Absolute pleasure, man. You know, guys, the reason I started with Elliott wave theory, and also the reason I started with technical analysis, is also because I saw a lot of people not applying the rules. You know, so I'll give you guys a stupid example. In an ending diagonal, let's talk about an ending diagonal, okay? Because I saw one dude talking about an ending diagonal once, okay? In an ending diagonal, so you have your momentum, your bull market, and then you end and you fall down, you go into a bear market. He spoke about an ending diagonal, but inside of the ending diagonal, there was 1, 2, 3, 4, 5, 3-wave, 1, 2, 3, 4, 5, 3-wave. And then, you know, they're not following the rules, because in an ending diagonal inside of Elliott wave theory, it states that it has to be 3-wave structures. All of the structures has to be 3-wave structures. It's not if you feel like it, it's a rule. It has to be 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up. That is the rule for an ending diagonal. So when I watch someone on YouTube talking about an ending diagonal, but there's 5 waves inside of those structures, okay, it's also part of the reason why I started a YouTube channel, is to say that where did you study your Elliott wave theory from? The rule states if it's ending, it has to be 3-wave structures. Here you come and tell your audience it's an ending diagonal, but it has clear 5-wave structures inside of it. Okay. Also, in an impulse, your 4th wave is not allowed to go into the territory of number 1. Okay, and that's all they focus on. It's not an impulsive structure, so it can't be a 5-wave structure. And then they forget about leading diagonals, 1, 2, 3, 4, 5. Okay, ABC, continuation. You're allowed to get overlap. Okay, so in a nutshell, guys, the reason I also started this YouTube channel is because I see some people ignore the rules and they ignore the probabilities. It looks like a diagonal, it must be a diagonal. But they forget about the probabilities. Diagonals, any diagonal, contracting triangle formation always carries the lowest probability. You have to look at an impulse or a 111, or a corrective structure first. If those ones don't make any more sense, like here, Okay, let's use this one as an example. I did save it here, guys. Here we go. Right, this scenario, okay. What most Elliott wave traders will do is that they will say, wow, this looks great. I'm going to long like a crazy person over here. We're continuing the bull market. But what they are not considering is that in Elliott wave theory, it states that a diagonal carries lower probability. You have to look at every other count first and give that count the highest probability. Diagonals always carry the lowest probability. And most Elliott wave traders that I've seen out there, okay, they just start with diagonals. It's always a probability. They don't even discuss lower and higher probabilities based on the rules of Elliott wave theory. Anyways, guys, that's just my little rant, okay? It's also part of the reason I wanted to start a YouTube channel, is to tell people, well, which structures carries higher probability, which structures carries lower probability. Because I remember this, okay? I don't know if I still have it saved. Do you guys remember? I think it was on this one over here. Let's go to the 1 hour. Do you guys remember this one? Okay. If you applied the rules inside of Elliott wave theory, you would have known that this scenario has very low probability, extremely low. It actually has been invalidated, and I spoke about this when this happened. You can go and check out those streams. When this happened, I said, guys, I'm not looking at this anymore. When this happened, I didn't even wait for the 5th wave. I said, when I saw this, I said, this scenario has been invalidated. And the reason is you're not allowed to have a flat. Can you guys see? Not allowed. I wrote it there. Okay, when you zoom into that structure, you are not allowed to have an A, B flat. It tapped a flat target. The 0.9 is your minimum flat target when you take a fib from the high, from the low to the high. It tapped a flat target. It tapped the 0.9. Not allowed. A, B, C flat. You tap a flat, you take the high. A flat corrective structure is not allowed inside of a diagonal. So I invalidated the scenario, and you can see what happens. We invalidated it. Anyways, that's my little rant, guys. Let's get back into this price action over here. To remember to smash up that like button if you haven't done so already. Guys, if you're not subscribed to the channel and you want proper technical analysis, okay, I do love education. Okay, I want to teach you to analyze the markets so that you don't have to rely on other people's analysis. You can just do your own damn analysis. Okay, right. So now that we are on this scenario, well, this is basically the only bullish case scenario that's left, where this low is still protected. Guys, this is the only and what I mean by bullish case scenario, because there is a corrective structure that can still take us higher. What I mean by bullish case scenario is that this low is protected and we go back to all-time high. That is what I mean. Okay, where you formed a 1, 2, 3, you have a 3-wave structure in a 4, you want to go back up in a 3-wave structure to complete wave 5, you want to see a correction, not take the low, and we move back up aggressively and we go and take the all-time high. 1, 2, 3, 4, 5. Okay, this scenario, like I've said, carries low probability. Diagonals are never preferred unless I won't say unless everything else fails. It just carries low probability. In this scenario, you have formed a WXY in wave 1. So because it started with a 3-wave structure, it has all the waves has to be 3-wave structures. So 3-wave up, 3-wave down, 3-wave up, 3-wave down. You want to see another 3-wave up. You short. We have weekly and daily levels and point of controls all up there. You guys can see there are many levels, weekly, naked point of controls. So definitely an area where I will be looking for a short if price continues here to the upside in a 3-wave structure. I will be looking for a short, and I will be looking for a long if the scenario had to play out. Okay. Right, let's clean up the kitchen again. Take the scribble here out the way. So obviously now started with the lowest probable scenario. Okay, now this scenario over here is very interesting. It's a very interesting scenario over here, guys, because it supports two scenarios. Let me explain. And I highlighted this scenario to the Legends Pro community this morning. What makes this scenario so interesting, again, it's a diagonal. Okay, low probability, but we have to consider it because this is smaller time frames and you do get diagonals play out on the smaller time frames. Okay. In this scenario, we either have a completed WXY, you have a W, X, and this is a B, C, or a W, X, Y, and a B, and then a C to the upside to complete your Y wave. But basically, this is the top. That's the top. This is the bottom. The completed structure, the completed structure is finished, and now you want to build an impulsive structure to the downside, and I cannot count an impulse. So it has to. The only scenario left for me at the moment is a diagonal because I cannot count 1, 2, 3, 4, 5. Okay, but then it moved up again because you want to see 1, 2, 3, 4, 5. You want to form a lower high, and you want to continue 3, 4, 5. It needed to take the low already, so I cannot count an impulse. The only structure, because there's overlap, is a diagonal to the downside. Inside of this diagonal, you have a 3-wave down, 3-wave up, 3-wave down, and now you want to create another 3-wave structure for your wave 4. That's your invalidation. You want to go down in another 3-wave structure. And now this is where it gets interesting. In this scenario, the WXY, you want to form a 3-wave structure up, which basically becomes 1, 2, and 3 to the downside. You take the low. Bear flag, okay? It's a damn bear flag. We're going to break down, come back for retest, and fall to the downside. But this scenario also supports a slightly more bullish scenario, okay, where we have an unfinished WXY, where we can still go higher, where people are going to say the bull market is back, only to complete a larger WX, Y to the upside, and then fall down. Okay, but you can see that this structure remains the same in this scenario. So what I would ideally still like to see in this scenario is one more low to complete the 5th wave, and the A, B, C. Okay, so you're basically ending your C in an ending diagonal which has 3-wave structures inside of it, so it's following the rules of Elliott wave theory. You have a 3-wave in 1, beautiful. You have a 3-wave in 2, beautiful. You have a 3-wave in a WXY in 3, and I did count this structure this morning. Counts beautiful as a WXY. You want to see another 3-wave structure to complete your wave 4, and you want to fall down in another 3-wave structure. So basically, I'm still looking. I actually had that green box highlighted to the Legends Pro community. I think it was... That is where I'm looking for that short for that 5th wave, which carries low probability. But this is the box that I'm still waiting for. Okay, I'm still waiting for my box. We have naked point of controls at daily level. It's also the 0.786 when you take a flip from the low to the high. Okay, there's some nice support here, which so guys, you can see in the most bullish case scenario, you're looking for let's say $100,000. In the bearish case scenario where this is the Y, I'm still looking for a 3-wave up, so I can take advantage of this move. Whether it's a 3-wave up and it falls down, or whether it's a larger wave to the upside, I can take advantage of this move, take profits where I'm supposed to take profits, leave some of the position open to benefit from higher momentum. Okay, but this is where I'm looking for the opportunity to potentially play this move. Profit, leave some open. That's how I plan to trade this. Okay. Now, I know that some people will say, but Dewald, a 112 or 1112 always takes priority over a ending or a leading diagonal. Okay. So you need to see a 1, 2, 1, 2. It either makes another 1, 2, or it doesn't have to, but at some point you want to see the drop. And then at the bottom, you want to see 4, 5, 4, 5, 4, 5. You want to see a repeat of that at the bottom. Personally, I cannot give this scenario the highest probability, although technically, in theory, it carries higher probability because of this. Let me show you. Okay, this little move here to the downside. Do you guys see this? Ladies and gentlemen, now this to me looks like a three-wave structure. Where's 4? Where's 5? Okay, now because this looks and smells and measures like a three-wave structure, I cannot give multiple 1, 2s high probability. Because I know there's going to be people talking about it. 1, 2, 1, 2, 3, or you get another 1, 2, and then you fall to the downside. In a triple 1, 2 or a double 1, 2, you have to form 5-wave structures. So yeah, I can count a 1, a 2, a 3, a 4, and a 5. So that one balances. But yeah, that is where the mess started with this impulse down. It's a 3-wave down, then correction, and then another drop, and then correction, another drop. So it's a 1, 2, 3, 4, 5, but there's a problem. It has to be 5 waves. Okay, this is my personal view, guys. Multiple, multi 1, 2s always carry higher probability than a diagonal. Okay, you want to see 1, 2, 1, 2, fall. Triple 1, 2, 1, 2, 1, 2, fall. But because of that, I can't give triple 1, 2s or double 1, 2s the highest probability. It has to be 5 waves. Right. If price does fall aggressively here to the downside, guys, remember, I practice good risk management when I do my trading. If price just waterfalls down here, okay, there's no trade. Or if I do get in a trade because there's a reaction, make sure, you will know that I will get stopped out. I'm not going to be there adding until I liquidate my account or my position. Okay, because sometimes low probability scenarios do play out, but I cannot give a 1, 2 and a 1, 2, and we absolutely going to waterfall here to the downside, the highest probability because of that. Okay, it's just my rules that I follow, guys. 3-wave down. Okay, if that was a 5-wave structure, I would have said, guys, double 1, 2, triple 1, 2 takes higher probabilities. I can count clean 5-wave structures. Okay. So, I mean, the first one just makes sense. You have a 1, ABC flat. So you have a 1, 2, 3, 4, 5. Beautiful. Inside of these structures, I can count 5 waves. I can count 5 waves down there. So it makes sense. This one also looks a little bit 3-wavy, but let's not get into it. But this one, okay. Anyways, let's get back to the scenarios. So let's go back here onto the 1-hour time frame. So I guess what I'm trying to say here, guys, is that in the most bearish case scenario, okay, I still expect a low and a high before we fall down. That's what I'm expecting. I'm looking for a long, and depending on how price reacts, there's a nice little consolidation area here, okay, resistance, that presents a shorting opportunity. In the most bullish case scenario that I have here, which is still corrective, that becomes a profit-taking area if I do successfully enter a trade here. This becomes a profit-taking area and I leave some of the position open for higher levels. If not, I will get stopped out with the profits that I took over here. This is how I plan to trade this. Because you can get this leg. Okay, I don't know if we're going to get this leg, but we can. And I want to take it, but I want to be positioned here. I don't want to try and look for a long over here. I want to be positioned over here already. And if it falls, it falls. No trade. No trade. It falls. Okay, or I get stopped out, depending on what happens there to the downside. Right. Very interesting. okay, that you have the same structure that supports both scenarios. Very interesting. How ironic. Okay, but guys, a diagonal always takes lower probability than multi-1-2s. But in this diagonal, it actually makes more sense because some of the structures are three-wave structures. Okay. I think that's basically what I wanted to discuss now, guys. So most bearish, okay. Locally, okay, I know something else I wanted to discuss as well is to say that, okay, there's a chance that you could do this and then go up for Y. But there's also a chance in this WX that X is done. There is a chance that X is done. But now locally, I want to see a 5-wave move up. So this is where it becomes interesting. So for me, from a probability perspective, it still makes more sense that X is here because of what's happening locally. So if I go into the 10-minute time frame, guys, now, okay, this is how I determine probabilities. Okay, and I look at this structure because remember, once you form a low, you need to see 5 waves up. And I see a 1 and a 2 and a 3. Now this 4 is becoming way too long to still do this and consider this a 1, 2, 3, 4, 5. It's too long for me. Okay, it's already invalidating my rules. I don't care. Okay, so that's not how you want to start an impulse to the upside. To the upside, I'm actually more interested in shorts. Okay, from a day trading perspective. Okay, and I'll just do this, right? You can see. If I take a fib from the high to the low, right, you have a weekly point of control, a weekly level, you have the 0.5 Fibonacci, you have a long consolidation area that we formed over the weekend. So if price had to come back up, I will be looking for a short in this zone to take the low again to go and play the C wave to the downside in that 1, 2, 3, 4, 5. Can you guys see how I align my, I go from the larger time frames into the medium time frames into the smaller time frames. And now because of what I'm seeing here locally, it makes more sense to get a 3-wave structure, a rejection and a fall to the downside. So I'm looking for a short. If price continues here to the upside, well, the only other short I will consider is from the naked point of control inside of this zone in perfect confluence with the 0.786. But that will invalidate a diagonal. But I will still trade it. I don't care if it invalidates the diagonal. If I see the reaction that I want, I can still place a short and a trade. Okay. Pippin going strong. Pippin going strong? Who's Pippin? Very interesting. Yes, Valto, guys, lowest trading fees at the moment. If you're looking for the lowest trading fees, Valto is the exchange that myself and Andy are using at the moment. So guys, throw $10 in there, test it out, try it out. I have given the team a suggestion. Either I don't know, maybe the feature is available and I don't know where to activate it. But I have asked the team to please enable hedge trading because, sometimes when I'm in a long, so you could have played the SFP from this, a beautiful SFP, by the way. Let's say you're in a long, okay, and you want to hedge a short over here because that could build maybe a higher low and up, whatever the case might be. I like to have hedge mode enabled on the exchanges that I trade on, so I have asked the team to build that. If it's not there, maybe it is there, I just don't know how to activate it. But that's the great thing about knowing the team. I can just say, hey guys, what about this? You need to have this feature. Okay, professional traders like this feature. You need to have it. Pippin is a shitcoin, meme coin, malware, Chigamajili. Okay. Mooi interessante, yes, baie interessante. Theory or fact, there are no patterns when you don't know what the market makers are going to do. If you do, then you have a fix. Okay, theory or fact. Thank you, Dewald. Guys, well, this is basically all I wanted to discuss today. I hope you have enjoyed the macro analysis. If you guys would like to support the channel, join our Legends Pro community. We there get the alpha. Okay, links are always down in the description. And okay, Valto, absolute amazing to have these trading fees again. I miss those trading. It's really great to scalp on trading fees like this, guys. And there's something big. I'm just waiting for the for confirmation from the team, but there's something really nice coming for BTCC. Guys, I'm hoping that hopefully tomorrow I'll be able to let you know what's coming for BTCC. So keep your ears and eyes peeled. Anyways, guys, have yourselves an amazing day. Until the next one. Cheers for now.